Thoughts now from Jared Bernstein and Dan Mitchell. Welcome back to Power Lunch to both of you. Dan,
thank you.
Should we be worried so much if, in fact, buybacks are growing at a faster pace into either dollar terms or numbers than capital spending is? Because ultimately, don't those buyback dollars work their way back into the economy eventually?
First, there's nothing wrong with buybacks. It's a way of giving money back to shareholders, and shareholders can then reallocate that capital to more productive uses in the same way that, yes, it's a one-term thing, sort of like worker bonuses that we've been seeing from companies are a one-time thing. But I would agree in the long run, the key is not only are we getting higher capital expenditures, but is that translating into higher productivity and higher wages? And I'm confident we're going to get good numbers on that, but that's mostly something that happens in the future. The buybacks and the bonuses are more of a short-term thing because companies are getting somewhat of a windfall of lower tax rates on past profits.
So, Jared, the theory there, I suppose, is the one that if money goes back to shareholders or to the owners of businesses, either through dividends or buybacks, that ultimately it works its way through the economy in what used to be called a trickle-down fashion, right, so that productivity increases, ultimately worker welfare is better, wages are higher.
Well, look, with respect, Tyler, we don't need to really call that a theory because we have empirical evidence. And the evidence shows that there's no historical correlation between accelerated buybacks and investment in CapEx. Now, I'm not begrudging the folks who benefit from the buybacks, but this is very narrowly concentrated income at the top of the scale. And if you want to draw a causal linkage between buybacks, investment, productivity, and then wages, you've got a lot of links in that chain, and I'm here to tell you that empirically, those links have been shown to be broken, especially, by the way, the very last link. Even if we were to get more productivity from more investment, which, by the way, would be a great outcome, we've seen that median compensation has very much departed from productivity growth over the last 20 years. So I don't believe the trickle-down system works, not based on theory, but based on many decades of empirics.
And we should point out, Dan, that a big part of that buyback boost has to be Apple with its $100 billion worth of buybacks. But the Republicans, including President Trump's economics team, promised the average American family will get $4,000 more from the tax cuts. Do you think that's going to happen?
I guess it depends on your time frame. If you can simply increase the economy's growth rate by, say, 0.2%, by the time you get 20, 25 years down the road, yes, you'll see big multi-$1,000 increases in worker compensation. Now, Jared and I can argue, will it be 0.2% growth, 0.1%, 0.3? The key thing to understand is that in the long run, if you have a sustained increase in economic growth, sooner or later it's going to mean good news for workers. And that's, I think, ultimately the real test that Trump and the Republicans are going to face. And by the way, I'll be the first to admit there's a lot more going on in the economy than just the corporate tax rate. If Republicans don't control spending, they're going to sabotage their own tax bill.
Jared, your thoughts there? In other words, do you expect incomes to go up as a result of lower taxes and the repatriation of corporate profits? We've seen some of it in the form of one-time bonuses typically.
Yeah, so first of all, the bonuses have paled in comparison to the buybacks. I mean, it's a trivial, the bonus has been trivial relative to the buybacks. I mean, Apple, you mentioned Apple, and I'm cherry picking here, and so I'm cherry picking an apple, so I guess I'm consistent, at least fruit-wise. But Apple plans to do something like $30 billion of CapEx over the next 10 years or so, or actually 5 years. And over the past 6 months, they've done $33 billion of buybacks. So a very tilted thing there. Look, when you talk about the tax cut and incomes, it's really not relevant to say incomes broadly in some macro sense. Sure, some people's incomes are already very much benefiting from the tax cut. After all, 80% of the value of the stock market is held by the wealthiest 10% of families. So when you do the buybacks, their wealth increases. The question is it going to reach the middle class? And by the way, this 20, 25-year perspective that Dan has, that may well be true. However, that's not what the middle class was promised. They were promised that $4,000 would show up in their paycheck starting pretty soon, and that's just not going to happen.